Mortgage rates fell, listings jumped, and prices stayed flat in many areas while spiking in others. How could all of this be happening at once and be true? Because usually when listings jump, you experience home prices are going to start to fall. Even Zillow can't even figure it out. I mean, they made 3 revisions to their initial forecast in the beginning of the year on where they expect home prices to be within a year. So in this video, you're going to see why is this housing market really all weird? Why is it all happening? And I'll even run a live example to identify what good markets can you even still negotiate in while we go through this chaotic housing market. Although rates are down, they are not leading to the monthly mortgage payment that a lot of potential home buyers are even looking for. So yes, mortgage rates has eased into the low 6s, but let's keep in mind, this is essentially where rates were about a year ago. And if we go further out to about 3 years ago, the rates today are just a little bit lower than they were back then. As we currently hover around that 6% range, and who knows how long we're going to be there, this has already proven that many buyers are not really looking to get into the market and obtain a 6% mortgage rate, especially for those individuals who have a mortgage rate that's either below 6 or even worse, below 4%. I even misjudged this market because I thought the springtime was going to be a much better time for everyone to purchase because I thought we were going to see sub 6s in terms of mortgage rates, but unfortunately that didn't happen. The only thing that did happen were we all, or at least some areas, saw slightly higher home prices. So if your strategy is to really wait for mortgage rates, honestly, you can do that, but I would really encourage you to really change your strategy and go in with the mindset of, all right, this is my monthly payment and I need to get as close as possible to this ideal monthly payment that I want to be in. So this is what I'm recommending to even my clients right now, or even the people I'm speaking to, is, hey, let's go in there with the mindset of let's negotiate the sellers to buy down the rate. Let's get your closing costs covered, right? These are 2 things that you can go ahead and do to get as close as possible to that monthly payment that you are looking for. Because if you're going to use the news headlines to really control your monthly payment, you'll quickly find out that that is not what controls it. In fact, it's the rates, it's the credits, it's the permanent buy downs. That's what you really need to be looking for in this sort of market to get a better payment or to get the ideal payment of what you're looking for. Next, I'll go ahead and show you the inventory spike and why more for sale signs doesn't always necessarily mean better pricing. As you may know, listings climb back towards pre-pandemic norms, so it's normal to experience higher days on markets and price cuts to exist. So if this is happening, this is what I call leverage for the home buyer that can spot the right pocket. And what is it that I even mean when I say the right pocket? It's when supply is greater than demand in that specific price range, that price tier that you're looking at. And if that's the case and you've identified the right pocket, then this is your opportunity to go ahead and negotiate your closing costs, maybe repairs, buy downs, or whatever it is else that you want. Because these opportunities don't exist all the time. In fact, this is exactly what actually happened a couple months ago when sellers started to delist their homes when identifying or probably speaking to or seeing what other sellers were getting for their homes. They probably just said, you know what, I'll just wait it out. So if a situation like that occurs, then you lose negotiating power as a buyer. But later in this video, I'll be looking at different markets to help you identify the right pocket. But of course, if you do need help and a little bit more assistance on identifying or even navigating your housing market, you can go ahead and click the link in the description below to be connected to one of our referral partners. Here's where the housing market can get really complicated and seem very, very strange. If you're looking at the housing market as a whole, then you're probably looking at things nationally. So you may see that prices are slightly up or probably flat. But I really need you to zoom in because you'll quickly identify that real estate is very hyper-local. In fact, we had plenty of markets that were dipping this year while other markets were inching up. Specifically, those markets that were inching up were the Midwest and the Northeast. So although it's great to know what's going on nationally, personally speaking, I think it's way better to understand what's going on locally in that local market so that you don't apply the wrong strategy in the wrong market and potentially overpay, miss out on a great home, and then find yourself kicking yourself for paying attention to the wrong set of information. And it's important to stay up to date with the information because as you're going to see next as we speak on it, how the forecast has changed and they've made revisions month and month or even quarter after quarter. At least Zillow did. This year alone, Zillow made several revisions to their home price outlook. In fact, it was literally revised down, then slightly up, then slightly up again. All that may sound scary, but for home buyers, it means one thing. Uncertainty creates negotiating windows. So personally, how I would take all this, and you do what you please with this information here. If there's a negative headlines, then use it as a negotiating tool, because you got to think about it. If it's negative news, for those people who need to sell or are about to sell, that's not good for them. So they're going to need to have some sort of edge as far as how is it that they're going to get their home off the market. Whereas if it's good news, then you don't really have too much of a negotiating power there. Now let's go ahead and find out how is it that you can even identify those good markets that you can negotiate in. Now here's how you'll find the right market to negotiate in. First off, you're going to end up at this website, and I'll leave this in the description below so that you don't have to go ahead and find it. But here's the website that's going to share with you whether you're in a buyer's market, a seller's market, or whether it's just pure neutral, which neutral just really means no one has the edge here. Seller's market obviously means sellers have the edge. Buyer's market means buyers have the edge. So here you can easily identify it right now. Again, this is across the entire United States, so don't use this as verbatim for your market specifically. But you can see here we're in a really neutral market. In fact, if you want to scroll down and get a little bit more specific, you can find where those buyer markets, those neutral markets, where those seller market are. And it even has a strong seller's market segment here, which I'm not going to go through it entirely. You can go do this at your own leisure. This link will be in the description below, so be sure to click it to identify what market you're in. But here are some of the markets here where you guys can kind of see. I'm not going to list them because I know you guys all can read, so we'll go ahead and move forward. But if you really want to go ahead and take it a step further, here are some of the places that you can go ahead, depending on your city, your state, you can go ahead and click it and identify what market is it that you're in, that you can go ahead and see if it's a buyer, seller market, whatever the case may be. But the other step that you must do is we got to take it to this website here, which I'll leave this as well in the description below. But this is Redfin. You guys can literally, these are all public websites. You guys can find all this information out yourself. But the next important information that you want and need to be able to assist in helping you identify whether it's a good market to negotiate in is days on market. So this is, of course, going back to the United States as a whole. We're looking nationally. Once we look nationally, then we go dive deeper into a little bit more of a metro or even the area specific that you're looking in. So here we can see 47 days. But I'll do you a favor, right? So I click some of these already, right? So fastest growing sales price areas to give you an idea. So here's the housing market for Alabama, Birmingham specifically, and they have 47 days, right? You'll see how different it is, right? The United States was 47, if I'm not mistaken, right? 47. Birmingham, Alabama is 48. Let's see what Des Moines, I might be pronouncing it, Des Moines, Iowa is. It's 25 days on market. We have Pittsburgh, Pennsylvania, which is 50 days on market. So you can kind of see how the United States overall was pretty close. But of course, it's not exactly the same. And then we have, last but not least, Washington, D.C., which is at 66, which is greater than the United States. But once you've done doing that, right, here I work in the Raleigh market, so I just put Raleigh here. This is still Redfin, and in fact, go to your filters after entering your price range, your criteria, what you're looking for, or whatnot. But go to your filters. I'm not going to do it here, but of course you guys can go ahead and do it based off of what you're specifically looking for. But you need to go to the time on Redfin. So we know that the United States had 47 days on average in terms of days on market. So I would say more than 30 days. You can even push it to more than 45 days. Everything that pops up here, right? So there was about 2,400 homes that populated. You see how that immediately dropped it down to 1,500. That immediately wiped off 1,000 homes that probably was not negotiable. And this is not even considered the bedrooms, the bath, the square footage that you're specifically looking for. But once you do that, these are all potential homes that you can negotiate with. If all of that seemed a little too much for you, you can comment below the area or the zip code and the price range that you're looking at, and I'll let you know what the current days on market is, as well as if it's a buyer's, seller's, or neutral market. Although this housing market may be very, very strange, I can honestly say if you are able, willing, and ready as a buyer to go ahead and move forward and purchase a home, just go create your offer that works out for you. Because there are solutions out there, and believe it or not, that's exactly what I'm doing with everyone that brings me, hey, this is my exact scenario that I need. How is it that we're going to go ahead and get it done? So that may include seller's credit, assuming somebody else's loan, buying down the rate, getting their closing costs covered, and of course looking at new construction, because right now, if you guys don't know, new construction has crazy incentives going on for buyers that are out there right now. And of course, you can look at it, but I would always say just compare and contrast the two to make sure that, again, new construction makes sense in that market for you. I mean, if you insist, you want to go ahead and sit around and wait for the best opportunity and the best environment to go ahead and do so, you are more than welcome to do it. But right now, there are a ton of solutions that exist right now out there that, you believe it or not, you'll be very surprised as far as where you're able to get your monthly payment, especially if that's where your focus is. But thank you all for watching. My name is Roney Polynice. Consider subscribing, and remember, I got your back.